Instead of letting your hard-earned money sit idly in a bank or a regular savings account, where it barely keeps up with inflation, investing allows your money to work for you and grow without your constant presence. The goal is to let your money do the heavy lifting so that you can reap the benefits later on. The first step is figuring out how much you can comfortably save and invest each month. A good rule of thumb is to aim to invest at least 10 to 20% of your monthly income. For example, if you make $3,000 a month, that would be $300 to $600 to put towards your future. It's all about finding a balance between enjoying today and securing tomorrow. This means paying yourself first, before bills, leisure, or impulse purchases. Here's the thing: a regular savings account won't cut it. Inflation slowly erodes the value of your hard-earned money, and hiding your cash under the mattress won't make it multiply. However, investing your money unlocks the power of compound interest. So, what exactly is compounding? The process of compounding involves the growth of an investment over time, as both the original amount and the accumulated interest or returns contribute to further earnings. In the world of investing, time is your greatest ally. The earlier you begin, the more opportunity your money has to grow and compound. For instance, if you were to invest $1,000 today in a compounding asset with a monthly contribution of $500 and an annual interest rate of 8%, after 2 years, your total would reach $13,646.40. But if you let it ride for 5 years, you'd be looking at an impressive $36,668.93. If you're interested in learning more about compound interest, feel free to check out our previous videos where we delve into the topic. It's important to remember that everyone's journey is unique. Avoid falling into the comparison trap and resist the urge to compare yourself to others. Your investing journey is as distinct as your fingerprint. Some may start with a larger initial investment, while others may take smaller, consistent steps. Your financial goals, risk tolerance, and investment choices are personal to you. We are all on different paths, and that's perfectly all right. Embrace your own journey and stay focused on your own path, without being swayed by what others are doing. Let's discuss 10 amazing investment assets that you can start with today. 1. Cash. Cash is indeed an asset, serving as the most readily available form of wealth. While some may find it counterintuitive to include cash in their portfolio, it is, in fact, a strategic move that offers both flexibility and security. Often overlooked in discussions about investing, holding cash is a vital element of a well-rounded financial strategy. Although cash may not provide the high returns that come with riskier investments, having a cash reserve serves as a safety net for unexpected expenses and opportunities. Think of it as the foundation of your financial house. By keeping a portion of your portfolio in cash, you position yourself to take advantage of investment opportunities that arise during market downturns or when real estate bargains unexpectedly present themselves. Having liquid cash readily available allows you to turn financial challenges into strategic advantages. However, it is crucial to find the right balance in managing your cash reserve. Investing is not only about making money, but also about achieving financial stability while still aiming for growth. 2. Boring business. Boring businesses may not be the most thrilling, but they should not be disregarded. In fact, they often possess untapped potential that can lead to long-term success. Take, for example, small businesses in the pet industry or those involved in print-on-demand. While they may not make headlines like flashy Silicon Valley startups, they possess the qualities of dependability and sustainability. A pet business, for instance, taps into the unwavering love people have for their furry friends, guaranteeing a consistent customer base. This industry has proven to be resilient, as pet owners consistently invest in their pets' well-being, from high-quality food to specialized grooming services. Another option is the print-on-demand business, which operates on a low-risk model. In this type of business, you don't have to handle any physical products. Marketplaces like Redbubble, Amazon Print on Demand, and others take care of everything for you, producing products as orders come in. This approach minimizes excess inventory and reduces the risk of financial loss. The business of selling digital products, such as books or online courses, may not possess the same allure as big tech companies. However, these seemingly dull enterprises have the advantage of operating with minimal expenses and the ability to expand quickly. With their stability, flexibility, and potential for substantial control, they make enticing additions to your investment portfolio. Sometimes, the most substantial profits come from ventures that go unnoticed. 3. Selective real estate. Real estate is a tangible asset that has stood the test of time when it comes to wealth building. It's not just about buying a house. There are various ways to dip your toes into this market. First up, rental properties. Owning real estate that generates rental income can be a game changer. It's like having a and source of income that over time can even surpass the value of the property itself. Remember, location is key. Choose areas with growing demand and potential for appreciation. Another option is investing in small business, commercial rental spaces. As businesses grow, they need space to operate, and you can benefit from their success by owning the property they operate from. Lastly, if hands-on management isn't your style, consider real estate investment trusts. These are companies that own, operate, or finance income. Generating real estate investing gives you exposure to real estate without the headaches of property management. It's like having a stake in a real estate portfolio managed by professionals. 4. Basic agricultural land and consumer staples. Investing in basic agricultural land and consumer staples is a smart move because it caters to our fundamental human needs. No matter what, people will always require food and essential products, making these investments relatively recession-proof. Moreover, if acquired strategically, they can offer both capital appreciation and income through farming or leasing. Since it is a finite resource and the global population is constantly growing, the demand for food and land is also on the rise. While it may not be as flashy as other investment options, the stability and long-term potential make it an attractive addition to a diversified portfolio. Just take a look at Bill Gates, who owns over 200,000 hectares of farmland across the U.S. When considering agricultural investments, look for regions with fertile soil and a history of stable agricultural production. On the other hand, investing in companies that produce everyday essentials like food, hygiene products, and household goods provides a defensive strategy. These consumer staples tend to be recession-resistant, even during economic downturns. People may cut back on luxuries during tough times, but their basic needs persist, and they continue to consume these products. Investing in certain sectors can offer consistent returns over a period of time, serving as a stable source of income and providing stability during times of economic uncertainty. 5. Drugs and health supplements investing. In the realm of healthcare, there is a constant need for drugs and health supplements. As the population ages and people become more aware of their overall health, the demand for products that improve well-being continues to grow. This presents a promising opportunity for investors, particularly in the pharmaceutical industry. Companies involved in drug development and manufacturing are well-positioned for steady growth. Investors should seek out companies with a strong pipeline of innovative products and a track record of successful drug launches. Similarly, companies that provide vitamins, minerals, and wellness products can also be profitable. In today's society, there is a growing emphasis on preventative health care, which creates a sustained demand for these types of products. The healthcare sector not only offers stability during economic downturns, but also leads the way in technological advancements. This makes it an appealing avenue for long-term investors who are seeking both financial returns and a positive impact on society. 6. Art. Investing in art may appear to be limited to the wealthy, but it can actually be a one-of-a-kind, intangible asset for the everyday investor. Although it does not generate income in a traditional sense, art holds the potential for appreciation over time. Seek out up-and-coming artists or works from established creators who have a proven track record of increasing value. Engaging with local art scenes, attending exhibitions, and researching market trends can help you uncover potential opportunities. Remember, the art market can be unpredictable, so it is crucial to approach your investments with a long-term perspective. Consider diversifying your art portfolio to mitigate the risks associated with the volatility of specific genres or artists. 7. International investment and currencies. When venturing into international investments and currencies, you open the door to a world of varied opportunities. Don't limit your thinking to borders. Embrace the global market. Seek out established companies that have proven stability and growth on a global scale. By diversifying your portfolio internationally, you not only protect yourself from regional economic downturns, but also position yourself to benefit from the growth of economies worldwide. When it comes to currencies, think of them as an extra layer of protection. While the US dollar may be your home currency, it's wise to allocate a portion of your portfolio to other currencies, such as the Swiss franc, CHF. Switzerland's reputation for financial stability and prudent fiscal policies make the Swiss franc a resilient and unique currency. Including different currencies in your portfolio not only safeguards against currency risk, but also taps into the strength of economies with different monetary policies. Just remember to stay informed about global economic conditions and geopolitical events that may impact the performance of your international investments and currencies. 8. Stocks indexes. In the realm of the stock market, it is crucial to grasp the significance of compounding. Over time, investing in individual stocks allows one to acquire a partial ownership in a company. However, this path comes with higher risks and necessitates thorough research. It is wise to commence with well-established companies that possess strong fundamentals, a competitive edge, and a consistent performance record. For those seeking a more diversified approach, consider investing in broad market index funds or exchange-traded funds. These funds mirror the performance of an entire market index, offering instant diversification across multiple stocks. Dollar cost averaging, which entails investing a fixed amount on a regular basis, proves to be an effective strategy in navigating market volatility. This approach helps mitigate the impact of short-term market fluctuations and takes advantage of market downturns by allowing one to purchase more shares when prices are lower. Gold. Investing in gold has been a long-standing tactic to protect against economic uncertainties and inflation. Gold is often viewed as a reliable asset that maintains its value when traditional markets encounter turbulence. While it may not generate consistent income like other investments, including gold in your portfolio can bring stability. Gold possesses intrinsic worth and is influenced by the same economic forces that impact stocks and bonds during times of uncertainty, such as market downturns or inflationary pressures. The demand for gold tends to increase, and it can be acquired in various forms, such as physical gold, gold-backed exchange-traded funds, or even gold mining stocks. By incorporating gold into your investment strategy, you benefit from diversification and potentially safeguard against economic downturns. 10. Gas and oil. Investing in the energy industry, specifically in gas and oil, can be a profitable venture. As the world's population grows and emerging economies expand, the demand for energy remains strong. To capitalize on this, investors can consider adding energy stocks or exchange-traded funds, ETFs, focused on the energy sector to their investment portfolios. However, it is important to approach this sector with careful consideration. Look for companies that prioritize sustainable practices, are committed to environmental responsibility, have a strong financial foundation, and are forward-thinking in terms of renewable energy sources. By investing in companies leading the way in this transition, you can not only gain financial returns, but also contribute to a more sustainable future. In addition, staying informed about geopolitical factors that influence energy prices is crucial for making informed investment decisions in this sector. The energy landscape is constantly evolving, but there are still opportunities for growth and income for investors who are willing to navigate the complexities of the gas and oil market. Remember, it's not about how much you initially invest, but rather about starting and staying consistent. Begin with small investments, learn from your experiences, adapt your strategy, and watch your money grow.